All right, guys, sorry about that. I forgot to hit the record button for the YouTube. So, welcome to class. Today's class is going to be on calls and puts. We're going to explain those, how to trade them, when to trade them, and the risks involved with those. Either on Monday or Tuesday, I'm going to be having another Join Me class, which I will open up to more people. Our room is full now. I have to upgrade to allow more. But Monday or Tuesday, we'll do a class on spreads. And then Thursday or Friday, maybe even Wednesday, I'm going to do a very important class on trade, risk, and money management, and really how to manage your trading account as a business and to grow your account progressively month after month. All right, so first here now, what is a call? A call is an option agreement that gives an investor the right but not the obligation to buy a stock, bond, commodity, or other investment at a specified price within a specified period of time. An options contract gives the holder the right to buy 100 shares of the underlying security at a specific price known as the strike price up until the specified date known as the expiration date. So I have some examples on here, but I think I'm going to go to E-Trade Pro here to give you guys some examples. Here we see Amazon trading at $956.50 a share. Let me go to the option chain. And this is how you do it on E-Trade Pro. We type in Amazon and we see Amazon trading at $956.50 a share. And then we have the Amazon chart in the background here.
Dave,
Okay.
they're asking if you can maximize your screen. It looks fine to me.
Yeah, they must be on their cell phone now. There's nothing I could do about that. Some people are on their cell phones. All right, guys, so in this example that I have on the Word document here, we're seeing that Amazon's at $956.50 a share. Okay, don't worry about this picture. I'm going to share that with you over here. Okay, so for the calls, we're going to look at the 960 strike. Okay, the 960 strike, as you see here, on the left-hand side are the calls, on the right-hand side are the puts. So if we look here, the 960 strike, that's this one right here, highlighted in the blue, it has a bid of $9.30 and an ask of $9.60. It last traded at $9.70, but obviously that's higher than the asking price, so this is an older trade here that last traded. So theoretically, it's saying here we're going to get this for about $9.45. Now, since there's 100 shares in a contract, you need to multiply this price by 100. So a single contract of the 960 call for Amazon is going to cost you $945. So now, what happens if you purchase a single contract? Well, first off, it's going to cost you $945. And the nice thing about that is if you bought 100 shares of Amazon right now at $956.50, multiply that by 100. So 100 shares are going to cost you $95,650. Whereas with the call options, we're able to have control over 100 shares of Amazon above 960 for only $945. That's a great way to leverage your money is using options. So let's go back to the Word document here. So we see it's trading at, and it gives you control. So let's say we got it at $950. So you multiply that, it's going to cost you $950, which, like I said, if we bought 100 shares of Amazon, it's going to cost us $95,650. With options, we're able to leverage our money and have the possibilities for much larger returns. So a single contract of Amazon for the 960 strike for August 25th expiration. And if you look here, you could type in, you could click on as many expirations as you want. The third Friday of every month is your normal monthly expirations, and anything besides that is going to be your weekly expirations. So for example, here's a weekly expiration. This weekly expiration, as you see here, let's take a look, for example, September 1st. You see the open interest and total volume. Now, you're going to see a big difference when we go from the weekly expirations to the monthly. September 15th is the monthly, and look at these. There's thousands of contracts compared to the weekly contracts, which only have a couple. All right, so let's go back to the August 25th example here. The 960 strike. So like we said, if we bought it for $9.50 like I have in this example here, our break even is your strike price plus the price that you paid for the contract. So if you want to know where you need the stock to be for you to break even, it's very simple. Your strike price plus the premium that you paid for that option. So in this example, we're buying the 960 strike call at $9.50. So we need the stock at $969.50 by Friday to break even. So if Amazon is at $969.50 at Friday's expiration, we break even. And then if Amazon's at $975 by Friday, then our contracts that we paid $9.50 for would be worth $15, which is a 57.89% return. For us to have a 100% gain, we need Amazon to be at $9.79 a share on Friday's expiration, which if you calculate that, 100% return at $9.79, and like we said, the stock's at $956.50 right now. Let's see, 956.5 times 1.02. So a 2% increase in shares of Amazon will bring the stock to $975.63. So that's nearly that's going to be about an 80% return. So like I said, $9.79, 100% return. Nice thing about trading options, we can sell the options at any time. Just because we go here and pick any expiration date we want, as long as you own a regular call or a put, you can sell that at any time. So for example, let's say we just bought the 960 strike tomorrow. And let's say on Monday and Tuesday, Amazon surge higher, and Amazon's at 970, 980 by Tuesday. We then should have close to 100% return, and all you have to do is sell to close, and you'll get those returns, and you'll lock in those gains. Now, what is the maximum risk? The most you can lose with calls and puts are what you have invested in the contracts. If you got a single contract, for example, here for the $9.50, which is $950, the most you can lose is $950. That's your max loss. You can't lose any more. The only way you're really going to lose more is if you have a credit spread or if you're selling naked options. So that's the beauty of just calls, puts, and debit spreads is you have a set amount. You can't lose any more than that, and you have unlimited potential for gains. And as you see on our performance page, which we'll go over later on, you'll see some of the returns that we have. So again, the max risk. If Amazon is at 965 on Friday's expo, we bought the 960 straight calls. So our calls will be worth $5, which is $500. Remember, I said you have to multiply that by 100 since there's 100 shares in a contract. So if Amazon's at 965 and we bought the 960 straight call, our calls are going to be worth $5. Since we paid $950 for it, we have a loss of $450. If Amazon got back to $1,000 a share at or before Friday's expiration, our 960 straight call would be worth $40, $4,000 per contract. And since we paid $9.50, which is $950, our calls would be worth $4,000, which is a 321.05% return in a single week. So that's calls. So I want to take a little break here and go over if you guys have any questions on calls. Please let me know. Let me see how I could shut off these notifications quick so they don't pop up.
Hey, do you have a cell gene chart up anywhere?
Yes, I did. Let me
Some
see.
of the members said that that's the only thing they could see was the cell gene chart. Can you minimize that? See if that helps.
Yes, I'll just hold on a second. That's not going to help them. All right, guys, do you have any questions on calls here? So let me go over this. Again, we buy the 960 straight call. we paying $9.50 for it. Anything above $9.60, that's going to be worth some money by the August 25th expiration. For us to break even, all you have to do is add the strike price plus the premium paid. So $9.60 plus $9.50. You need the stock at least at $969.50 to break even by Friday's expo. Anything above that is gains. If it goes up another 9, let's see here, 9.5. So like I said, with the stock at $9.79 by Friday's expo or sooner, that's going to give you a 100% return. And then if the stock went to $9.88.50, you have a 200% return within that week's time frame before expiration. And like I said, you could sell anytime. You don't have to wait until the August 25th expiration. If everyone should be probably pretty good on calls. If you are, we're going to go on to puts. I'm looking in the chat room now. Is there any questions on calls? I'm going to unmute everyone. Like I said, I wanted this to be an interactive group here. And let me go to the participant list.
Everyone else is now unmuted.
All right, guys, I have you all unmuted. Is there any questions? Would you like to ask anything about calls before I go on to the puts?
I'm good.
You're good?
Yeah, Dave, I've got a question.
Yeah, sure.
I noticed that sometimes when you send out emails, it's not just like a regular call, like a call spread or call this, or there's a couple of different types of calls.
Yes.
And I get kind of confused, and typically I don't action those because I'm not sure what the difference is.
Okay, I'm going to go over that with you a little bit more towards the end there, because that's more with our service. Let me show you here, for example, quick. So if we go to our trade feed, here's the alerts that get sent out to members. So right here, for example, here was the trade we made on diamond puts. We just got these on Thursday, I think it was, right? So in your email, you're going to see two orders. Order 1's going to have this information in it, and then order 2 is going to be blank. Now, if there's something in order 2, that means it's a spread. If it's just this single order, you see here, it's DIA. Buy to open, puts 220 strike for August 25th expiration, and the entry price is 225, which we're up about 50% on that position right now. But yeah, we'll get towards the Santarelli exchange at the end here. Right now, it's just on calls and puts. So, does everyone have anyone else have questions on calls?
Dave, are you going to post these PowerPoints somewhere?
Yes, they're going to be right after this Microsoft Word document. And then I'm going to have a YouTube video at the end. I'll post it to YouTube. All right, then, let's get on to, I'm going to mute you guys here, and we're going to go over puts, and then I'll unmute you again.
Everyone else is now muted.
All right, guys, so that was calls. Now let's go to puts. What's a put option? Now, I'd like you guys to really pay attention here, because I think these next few weeks the markets are going to go lower. We just started buying puts at the Santarelli exchange. We got some puts on Diamond, DIA, the ETF for Dow. We got some puts on QQQ, which is the ETF for the NASDAQ. And we got some for this week's expo, some for September monthly expo. And so I'd really love for you guys to make sure you pay attention here on puts. Sometimes it's a little confusing since you make money when the stock goes down in value instead of like a call where you make money as the stock goes higher. So I'm going to go into a little bit more detail with this one. All right, what is a put option? A put option is an option contract giving the owner the right but not the obligation to sell a specified amount of underlying security at a specified price within a specified time, which is your expiration date. This is opposite of a call option, which gives the holder the right to buy shares. A put option becomes more valuable as the price of the underlying stock goes down relative to the strike price. Conversely, a put option loses its value as the underlying stock increases in value and the time to expiration approaches. So we're going to stay with the same example here with Amazon. Amazon right now in live time here is at $956.50 per share. Okay, so we're going to look at the 950 strike put is trading at 640 to 660 a contract. Let's go over here and look at this. So again, your left side is your calls, your right side are your puts. We're looking at the 950 strike put. So let's make this a little larger here. So the 950 strike put. Another thing too, look at the volume on the put side compared to the call side. But anyway, so the 950 strike put is trading between a bid of 640 and an ask of 660. Last traded at 650. Theoretically, we could get it right now at 650 if the market was open. So 650 for the 950 strike put. All right, now let's go back here to our example. Okay, so the put, just like the call, it gives you control over 100 shares below the strike. Short. It gives you control over short shares below the strike price. So you always need to multiply the cost by 100, just like I said. So if we have it's $6.50, we multiply that by 100. So a single contract for this 950 put is going to cost us $650. Remember, with puts, we want to buy the puts when we feel the stock is going lower and calls when we think the stock's going higher. Puts will make us money as the stock drops. Calls will make us money as the stock increases in value. So we buy a single contract of the Amazon 950 strike put for August 25th expiration. Now what? Our break-even point, now before, like we said with the calls, our break-even point was strike price plus premium. Here it's just the opposite. It's strike price minus the premium. So in this example, we're buying the 950 strike put for $6.50. So strike price minus what we paid, $6.50. That means we need Amazon at $943.50 for us to break even. So if Amazon's at $943.50 at Friday's expiration, we broke even. If Amazon's at $935, then our contracts that we paid $6.50 for would be worth $15, which is 130.77% return. The further the stock drops, the more profit this contract is worth. Again, we sell our puts at any time. We don't have to wait until August 25th expiration date to sell our puts or our calls. Now here again, maximum risk. Still have people joining here. All right, the maximum risk on the puts. The most you can lose with calls and puts are what you have invested in the contracts. So if you got a single contract in this example, the 950 strike, it costs you $650. That means the most you can lose is $650. Now at the Santarelli Exchange, when we make a trade on a call or a put without doing a spread, now this is important. Whenever most of you members, most of you in here are TSE members, but those of you who aren't, or if you're new to TSE, I only make a trade, a call or put, if I feel that I can at least make 100% return on that option. Okay? If I don't feel I can make 100% return with a regular call or a put, then I'll go with the spread. For the simple reason being that with a call or a put, we need to cover that cost of the premium that we paid for that strike. With the spread, we need a smaller move. It could be a 0.5% move, and we could have over 100% return. So that's why I use spreads so often, and that's why we have huge success at TSE, is we look for something that we just need a small change in price. And like I said, if we're bullish, we think the market's going higher, we'll do a call spread on a position. And we just need a small 0.25%, 0.5% move, and we'll have 100% return depending on what we pay for it. Just like I said, I see the markets going down this week. We're near major support levels, which I'm going to go over some stocks and charts in a minute here on eTrade Pro and show you guys some major support and resistance levels we're looking at right now. So that's how puts and spreads are. You know, I'll only make a call or a put trade if I feel it's going to give us at least 100% return. All right, max loss of a put is if the stock is above 950 at the end of the day on expiration. So let me go over here now. That's the end of that. So let's have this up now. So same thing with the call. We did the 960 strike example. If the stock is below 960, then we lose our total investment on Friday, August 25th. If the stock is above 960 on August 25th, our contract is going to be worth some money. Now, like I said, to see your break-even point, the strike price plus premium paid. So we need this about 960, 950 or higher to break even. Anything above that is pure profit. On the put side, we were going over the 950 strike. So anything below 950, we make money on. Anything above 950, we lose money. So if August 25th comes around and we have the 950 strike put on Amazon and the stock's at 952 or 953, this option here is going to be totally worthless and we're going to lose our max value, which is $650. Okay, and as long as it's below 950, even if it's at 947, 944, we're going to make money. And, you know, the lower this goes, the more profits we make. All right. Is there any questions on puts? I want to make sure everyone understands this well before I go on to the PowerPoint presentation, because this is, like I said, an important topic. Let me unmute everyone here.
Everyone else is now unmuted.
Okay, guys, I just unmuted everyone here. Is there any questions on puts or calls?
I got a question on a put.
Sure.
The question is on a put. I thought that if the stock was trading below what the strike price is, the seller of that can also force the obligation for you to buy that in its entirety. So at the 950, could we get slammed with having to pay the $95,000 for those 100 shares? You made it sound like the max loss is only the premium we paid.
Yeah, the max loss is only the premium you paid. You cannot lose more if you buy a put. Now, if you sold short a put or sold short a call, you could lose more. But I think you're getting this confused a little bit with expiration day. So let me go over this.
Okay.
We want to make sure that we sell our options before the end of the day on August 25th. For example, let's say we bought the 960 straight call and it's at 970 on August 25th. If we do not sell that, it's worth $10, so we have a little bit of a profit. If we do not sell that, on Monday, your shares are going to get exercised and you're going to have 100 shares of Amazon that you paid $960 for in your account. So you have to make sure you sell your options before the end of the day on August 25th or whatever expiration you buy. Same thing with puts. If you bought the 950 strike put and the stock is below 950, if you do not sell that option before the end of the day on expiration day, you're going to be short 100 shares then come Monday, and you're going to be, debited the $96,000 in your account for the shorting the 100 shares. So I think that's what you were getting confused with there. But your max loss is whatever you pay for your premium here. If you bought 2 contracts, for example, of the 950 strike put, your max loss is $1,300.
Okay. I got it. So we just got to make sure we sell.
Yep, always. Now, the only time you don't have to sell is if the option's worthless. Then it makes no point to sell it because you're just going to get charged the commissions and fees to sell your option. So if it's worthless, you do not have to, you don't have to sell it. If it's in the money, ITM, you want to sell your option.
Okay, great. Got it. Thank you.
Great. Any other questions on calls or puts?
Yeah, I have a.
Sure.
If it goes to 950 and becomes below before expiration.
I can't hear you that good here. Could you type the question there in the chat so I could see what you're saying exactly?
Pepper, come, peepees. Pepper, come. Come. Pepper, come, peepees. Peepees.
Next, I'm going to go over some charts here, analyze some charts with you guys, show you guys some indicators and tools that I use to find trades. I'm also going to share with you the CEO of a major company just contacted me last week, and they're a member of my service. They love the service, and they wanted to show me their product, and I'm going to be able to share that with you guys tonight as well. So we'll go over some charts, then we'll go over that once I answer this question on puts here.
Two.
Janet, you still have time for it to drop. So what you're asking basically, let's say we bought this 950 strike tomorrow. The stock's where it is now. You're saying if it goes, let's say it goes to 965 on Monday and we have the 950 strike put. You're asking if, does it sell? I mean, do we have to sell it or could we keep it until August 25th? You don't have to sell it. Like I said, if Amazon's where it's at now and tomorrow the market opened and we bought the 950 strike put for 650, what's going to happen here? Let me go over this with you so you can understand your question here. I'm going to go over Delta and Theta. I'm going to go over the Greeks with you a little bit here. I mean, this might be a little bit too much for you guys, but so
No, okay.
okay, so 950 strike put. If you buy this put and tomorrow the stock's where it's at now, and let's just say we got it for the same price, 650. This is saying here for every dollar that, yes, let me put everyone on mute again here so I could go over this.
Everyone else is now muted.
All right, so again here, 950 strike put. If we bought it for $6.50, this is telling us the delta for every dollar this stock goes down from where it's at right now. So let's say we bought this tomorrow and the stock stays right where it's at now, 950, 650. If Amazon dropped $1 and went down 955.50, that means this 950 strike put is going to increase by 36.3 cents. So instead of being worth $6.50, it's going to be worth $6.50 plus 36 cents. So it's going to be worth $6.86 if Amazon dropped $1. And Janet, for your question there, let's say, for example, then on Monday you bought the put and the market rallied and Amazon went to 960 or 965. You're going to see a bit of a loss, but you still have time. I mean, if your technicals are still showing the stock's going lower and everything looks great, you could still hold on to that. You don't have to sell it. Now, I have a strict trading plan where if the stock option loses 50% of its value, then I'm going to take that loss and secure it so I don't lose any more. So if it gets any higher than a 50% loss, you want to, well, me personally, I'm going to sell it and take that loss and move on to my next position. But like I said, if it's Monday early on in the week, you don't have to sell it. You could wait and hold. As long as your technicals and your fundamentals still look great, you hold on to that option and let it do its thing. So any other questions for calls and puts? If I don't see any questions here, just type in yes if you do have a question. If not, I'm going to go into some charts. We're going to analyze. We're going to look at some tools, some indicators that I personally use, and then we'll go over a few other things here. All right, Wade, what's your question? What did I do here? Okay, there we go. I think this is back here. So any other questions, calls, puts? If not, I'm moving on to some charts here. Okay, Jay, theta. Let me go over theta here. I added that. I forgot to go over this. Theta is your time value. Your time value. So, for example, let's say we bought the 960 strike call for Amazon for. Hold on, I got some people here joining. All right, guys, so sorry about that. I had someone join. I made them the presenter by accident. So, for example, if we buy the 960 strike call and we pay $9.50 for it, Delta is telling us for every dollar Amazon goes up, this contract here, this 960 strike call, is going to increase by about 49 cents. So if Amazon went to 957.50, this here, the 960 strike call that we paid $9.50 for, is going to increase by about 49 cents. So instead of being worth $9.50, it's going to be worth $9.99, or right around there, give or take a penny or two. So that's what Delta is. Delta is telling you what this option is going to do as the stock rises, and Theta is going to tell us the amount this option is going to decay from time value. So this is going to decrease by the 960 straight here. This is going to be decreasing 73.5 cents per day if Amazon just stayed where it's at. So if Amazon just stayed here, 73.5 cents per day in time value we're losing. Like we said, time is on your side. The further out you go, the lower this is going to be. So watch, if we click September 15th Expo, the 960 strike, here you see it at 73.4 cents. If we go on September 15th, this is going to drop drastically. Watch this. So 960 strike here is only at 0.391. Our theta is only dropping. That means this option is going to decrease by about 40 cents per day if the stock did nothing. Okay? Whereas if we go with the weekly expo, this option's decreasing by 73.5 cents per day. So if Amazon moves, Jay, yes, the theta will still move and does affect it. You know, that stock, as the closer and closer you get to expiration, the less and less this is going to be worth. Let me go over a perfect example here. Okay, with options, you have something known as intrinsic value and extrinsic value. Okay, so let's go with the 955 strike here, for example. 955 strike, so the stock is already in the money by $1.50. Okay, it's $1.50 in the money. So our extrinsic value is, let's see here, hold on one second. Last traded at, all right, let's just use 1260 for example, okay? So our intrinsic value is $1.50. So 12.6 minus $1.50. So we have $11.10 of time value. Okay, we're only $1.50 in the money here, and the rest is all time value. So your intrinsic value is the value that's built in. Intrinsic value is $1.50 since it's $1.50 above this strike. Extrinsic value is time value. So we have $1.50 of intrinsic value and $11.10 of extrinsic value, which is time. So it's basically saying that there's $11.10 of time value, which if you multiply or divide that by 5, that's $2.22 a day, basically, for time value. All right, any other questions here before I move on? You're welcome, Jay. All right, I want to go over some charts now. I just analyzed a few charts earlier, and let's go over these. I usually have, this isn't my normal trading computer here. My normal trading computer, we tried the Join Me feature, and my microphone wasn't working. So let's see here. All right, let's stick with Amazon. All right, guys, first things first, let's see, what are these colored lines here? one of my favorite indicators to use in my studies are SMAs, which is your simple moving averages. I use 10-day, 20-day, and 50-day simple moving averages. If you watched any of my previous videos, this is how I find breakout stocks. So for example, right here we've seen whenever the stock is trading in between the SMAs, that's usually a time that I stay away from them. I don't want to trade anything, as you know, there's no clear sign that the stock's going to do anything. But the first day that the stock clearly broke above the 3 moving averages here, we seen this was our buy signal. So here is our buy signal on March 29th. The stock crossed above the 10-day, 20-day, and 50-day simple moving average, and it kept rising. That's our buy signal. That's a momentum breakout signal. And then our sell signal, there's a few ways that we could deal with this, but usually to keep it simple for members, I tell them the first time it hits the yellow line, that's when we want to sell, the 10-day simple moving average. So we bought here when the stock was around 959, 860, I'm sorry. We bought when it was at 860, and our sell signal was right here when it crossed the yellow line, 898, almost 899. That's a huge huge rise there from 960 to 899, and that's a what, 40 point move, 40 point move higher, and with options that's a huge return. So from March 29th, our sell signal came in on April 12th. So what's that, 13-14 days, and you made a massive return of probably over 500% on that, or even more. Okay, so for example here then, now same thing goes for when it crosses below. That's when it crosses above, that's a good buying signal. Same thing as when it crosses below. It crosses below the three main SMAs, that's a good time to short or buy puts. So right now you see with Amazon, sorry guys, getting a lot of people asking to join here, and I have to keep clicking it or it won't. Okay. All right, so the same thing. When it crosses below those 3 SMAs, that's a good time to short. And now let's say, okay, it crossed below the 3 SMAs. Where are we looking at as far as a price target for this to drop to if we're buying the puts? How we do that is, A, we could do support and resistance levels, or we could include more studies. For example, we could go with the RSI, which I put down here. Earlier today, while we were chit-chatting before everyone came at 88, I changed this. Usually the settings are 80 and 20. I changed mine to 70 and 30. RSI is your relative strength index. All you have to do to change these indicators are change them here. And then for overbought, I put mine at red. That means it's time to short. And when it's undersold, or oversold I mean, when it grows below 30, it'll be green, and that's time for me to jump in possibly. So that's what I use for my RSIs, and as you see here, usually it's a pretty good system. You see here was a good sell signal, short signal, and you see Amazon had a nice drop. Here again, here is another time that it told you to short. If you shorted here, you had a nice decline. Same thing here, a nice decline lower. So right now, you've seen here that it was just about over 70, and we're seeing some selling pressure coming in. So support and resistance levels. Let's go over this now. Right now, if you're looking at this chart, you should see something major sticking out to you. Let me share this. Oh. Hate these damn things. Never get them. Okay, so right here, this is our support level. And if you see here, this is a pretty strong support level because we have a triple bottom. we have a triple bottom. There's a bottom here. It came to support. It tested it and bounced up. It tested support here again and bounced higher. And here it tested, bounced, and it tested, and we're at support right now. So the reason why I'm saying Monday and Tuesday is going to tell us a lot about the coming weeks is if we see Amazon, for example, cross below this yellow line here, if this crosses below it, and closes below it, I think we're going to see some major selling pressure coming in, and the stocks and the whole market have a general pullback. So let's see then where the next support level is if it does break it, which I see it right here. Here's our next area of support if it does cross below this support level. So this level here then is right around 850. So if it crosses below 955 and closes below that, and we have another 100 points that Amazon can drop before it gets to the next support level. So this is really important, and like I said, Monday and Tuesday, if we see another a triple-digit decline in the Dow or NASDAQ takes a big hit again and stocks close below, like for example, this is Amazon. Let's take a look at Google. Google's doing the same thing right now. It's trading at a major support level, and this week should tell us a lot. This is from an earlier chart. Okay, so again, we see the stock cross below the 3 main simple moving averages, and right now we're at a triple bottom. We had a bottom here, here, and here, and we're here now. So if this one's Google here, if Google crosses below 925 on Monday, Tuesday, it doesn't have support again until we get down to about here. Hold on, there's more people asking to join. All right, so our next area of support then, if Google breaks down there, is right around here. Around 845, 850-ish. So again, if Google breaks below this support level, which is a very strong support level, as we see here, it stopped a few times and decided to bounce higher. If it crosses and closes below this support level, the next area of support isn't until around 850. So we have another 75 point drop possible on Google. Now let's take a look at Facebook. Facebook's been one that hasn't seen too much selling pressure yet. As you see here, it's still trading between the SMAs, not clear like Google or like Amazon where it's trading below. This one's still trading above. I think the reason being is obviously Facebook's a fundamentally and technically strong company. It has aggressive growth, revenue, profits, and it's just an overall great company. So we're not seeing as many sellers coming in, and we're not seeing as much selling pressure coming in on Facebook because it's such a strong company. They're seeing this as still a growth, which when the stocks start to rebound, this is going to be a great stock to jump into and ride higher. But like I said, it's trading between the SMAs now. I'm seeing no signal. Right here we have support right here, which it's kind of at right now. So again, we have major tech stocks trading near major support levels that we need to watch out for Monday. So here's Facebook. The other one should still have it in there. Here's Amazon, again at a major support level. It breaks through here. It could drop down to 850, and then Google. This is another one at a major support level right now, and if it closes below, if the markets remain weak, it could easily drop below 850. Okay, any questions on charts? Is there any stocks you guys would like me to analyze? Actually, let me go over another study here. I wanted to go over the Bollinger Bands. Okay. What was I going over with members before here? I think it was Amazon. as you see here, usually when we have strong selling pressure coming in, it usually rides the lower band, like back here. Let me get rid of these lines here. So see here how as soon as it crossed below the SMAs, it started riding the lower Bollinger Band lower. And then once it crossed above, we got a buy signal. But again, it's starting to do that now, and it's just starting this formation. And what I'm expecting, if we see some selling pressure on Monday, I'm expecting for Amazon to keep riding this line lower. And I could easily see it hit 940, which is almost 17 points below where it is now. So for example, if I wanted to go in, I could do a put spread. And like I said, this is all dependent on Monday, what happens Monday. If I see some selling pressure on Monday, I would go in and do a put spread. Or I might even just go in and buy some regular puts. For example, let's look at Amazon. So let me go over this quick with you guys now. Since I went over the calls and the puts, I want to touch base a little bit on spreads because this is really important. All right. So you'd think the stock's going lower. Like we said, if we got the 950 strike put, you need you're going to pay $6.50 for it, and you need the stock at like 643 something, 643.50 to break even. But what if I told you that if we did this, it's at 950, 650 now. Now look at this. This is what's unbelievable with a put spread. This is going to cost us 90 cents. So what this is, we're buying the 955 strike put and we're selling to open the 952 strike. So our max gain with the spread, well, a debit spread, for example, our max gain is the difference between these two strikes. So there's a $2.50 difference between these two strikes. As long as Amazon's at or below 952 by Friday's expiration, August 25th, this contract that we paid 90 cents for is going to be worth $2.50. So 250, divide that by 0.9. That's 178% return, and all we need is Amazon to drop 4 points. Exactly 4 points. It needs to just drop $4. What it did on Friday. If it just did that, it dropped 0.42% on Friday. If it did that again, this is going to be worth max value of 178% if it's at 950, 250 or lower on Friday. Now let's say tomorrow we got this for 90 cents and Monday and Tuesday Amazon fell sharply. This might be up worth about $1.50. This is never going to be worth the full $2.50, your max value. No matter how much this moves down below 950, 250, as long as you still have time until the options expire, this is still going to, it's never going to be worth your max gain because there's still a chance that the stock might move higher or move, and so you're never going to see your max gain. I have a lot of members, like for example, if we did this trade tomorrow and let's say Amazon dropped 20 points on Monday, they're going to say, Dave, why, the stock's below 950, 250, which is where we want it to be, or below for our max gain. And they say, Dave, the stock's below 950, 250, but I don't see a max gain in my account. That's because you still have 4 days until the option expires, and in that 4 days, the option could do anything. Also, another thing, look at this between the bid and the ask. You have a bid of $8.15 and an ask of $8.50. So right here alone, there's a 35-cent spread on just the 955 strike. Also, the 952 strike has a pretty big spread between 720 and 765, 45-cent spread. So, you're going to see this change drastically. That's why there's a bid of 50 cents and an ask of $1.30, and it's giving us a midpoint of 90 cents. So, like I said, we're going to go further into spreads in the next video. but I just want you to realize how great spreads are, and you just need a small move. For example, let's do this. For example, the 957 and 955. This is unbelievable here. Look at this. It only cost $1.10 for this spread, and all we need the stock to do is drop $1.50, and we'll have a max gain of over 100%. So like I said, this is where $2.50 divide that by 1.1, we'd have 127.27% return if Amazon's just $1.50 lower than where it's at right now. On Friday, it dropped $4. For example here, it dropped $4 on Friday alone. If we got this spread, all we need the stock to do is drop $1.50, and we're going to make 127% return. I mean, that's incredible leverage with your money, trading spreads, trading calls or puts. You can't beat these types of returns. And if you have the proper risk, money, trade management, and a proper trading plan in place, you're going to make substantial returns. I mean, it's just that simple. But the problem with most investors out there, number one, they don't have the patience to look for the stocks, or to they think quantity is more important than quality. Like I said, you want to look for as many indicators as you can. The SMAs, you want to look at the SMAs, across below the SMAs, the Bollinger Bands, the support and resistance levels, the RSIs, relative strength index. You can look at the MACD, which is your moving average convergence divergence. Where's the MACD here? Yeah, here you go. Here's the moving average convergence divergence. This here too is showing some selling pressure and the stock going lower. So the more things you get on your side for you, the stronger that trade is. I have people that just say, I entered a trade because it looks like it's going lower. I mean, they're guessing, they're throwing darts. You need to prepare yourself. If you're going to be a professional trader, if you're going to trade for a living, you need to prepare yourself and follow a plan that works, that's successful, and that'll make you money month over month. And like I said, you want to do lower risk. Like I said, this option right here, here's a debit put spread that only costs $110. This option right here only costs $110, and you only need the stock to drop $1.50 to be worth $2.50, which, like I said, is 127% return. So your leverage is much better at trading options than trading shares of stock, and your risk is defined. You have a defined risk here. If you bought this put spread, your max risk is at $110. Like I said, you have to multiply your options by 100 because there's 100 shares in a contract. So this one spread for one single contract, if you just type in 1 and 1, it's only going to cost you $110. So you could increase that to 5 contracts. If you increase that to 5 contracts, then your max, let me do something here because I hate when that stays like that. So if you increase it to 5 contracts, it's going to cost you $500 and $50 or 60? 5 times. It's going to cost you $550. Your max risk then is $550 for 5 contracts. Your max gain then, 5 times 250, your max gain is $1,250. You're risking, here's something else we could dive into a little bit here. So you want to have a risk to reward ratio on a trade. So for example, like I said earlier, my max I'm going to lose on a trade, I know for options, is 50%. I will not let one of my options lose more than 50% before taking that loss and realizing that 50% loss. I won't let it go higher than a 50% loss because chances are it's not going to bounce back unless I have a few months till expo. If there's longer than a month till expiration, it gets at a 50% loss and it was just like a fluke in the market, then I'll let that go on. But if it's less than 30 days, you gotta take that as a loss and move on to your next trade. So like I said here, if we bought 5 contracts for $550, our max we're going to lose following that trading plan, like I said, 50% of 550 is 225. So our max we're risking to lose is $225 on 5 contracts to make 1,250. So our risk is 225 and our gain is 1,025. So we're risking $225 to make $1,025. So you can't beat that risk to reward ratio. And like I said, that's all with following a trading plan, risk, money, and trade management. You do that, you're gonna make money. All right, is there any other questions on charts, tools, indicators, or anything that we went over here? Like I said, I want to keep this one, pretty simple for beginner traders. We're going to do another one on advanced spreads tomorrow or maybe on Tuesday. And then later in the week, I want to do a video or live class on risk, trade, money management. Share with you guys how once I get over a certain percent, I take in gains, I transfer them to other accounts, and I don't like to have a lot of cushion, because once you have cushion room, for example, let's say you have a $5,000 account and you got that up to $10,000 this week. You're going to say, wow, my account's $5,000 higher than where it was 5 days ago. So I'm going to try to increase my value by taking on more risk, by increasing my size of my contracts, or doing something a little riskier that might have higher potential gains. You're gonna lose that way if you think that way. So what I like to do is take some of my profits, most of my profits, put them in another account. Don't have too much of a cushion room. I don't like my account going above 100 grand. I think I have 85 grand in here now. I just did a $50,000 transfer the other day. So that's something that's really important that we're going to go over with you guys. You got to take profits. If you keep trading, and if you're trading for a living, have another E-Trade account. Like that's what I have, for example. Have another separate account where you take your profits and put them in a separate account. And then at the end of the year, you're going to be amazed by the profits you have. Following a trading plan is important. You have to treat this as a business if you expect to have profits and gains month over month. Too many people, like I said, I've seen members come and go. We've had well over 1,000 members through the course of Santa Rally Exchange, and the most frequent thing I see members doing wrong or traders doing wrong, number one, they think that quantity is more important than quality. They think they have to make 10 trades a week to make money. That's not the case. You're going to lose money that way, in fact. You have to search for the quality trades versus the quantity. Second thing, they try to go for higher risk trades. For example, if I made a trade if I bought the 960 strike call for Amazon, they might say, oh, $950 for a single contract, that's too expensive. So instead, I'm going to buy the 990 strike call, which is only $100 or $110 a contract. And they think just because that's cheaper and it's still a call, that this is going to make money. But the fact is, this has a theta. Let's see here. Let's look at our delta and thetas again. And these are the Greeks that we went over before. So this has a theta of 30 cents. This is going to lose 30 cents every single day. So if you bought this option here, and I bought the 960, if Amazon moves up $1, for a perfect example, the Amazon moves up $1 tomorrow, it's going to increase by 10 cents for moving up that dollar, but it's going to decrease by 30 cents because it only has 4 days till Expo. So it's a losing battle there. Now if you go up here a little bit more, you see they're getting kind of even, kind of level. The deeper in the money you go, the delta is higher than the theta, which is great. All right, let's see now what questions are. I haven't looked at questions for a while. Dave, could you go over the process you follow to identify the conditions for entry into the spread trades you make? Jeff, like I said, to identify the conditions for entry into a spread trade, for example, if I only see Amazon, let's look at the chart here, for example. If I only see Amazon going to about, this is a 3-month chart here. if I only see Amazon going to about 990, then I basically just get the calls, because we have about 24 points for it to increase if I thought it was going to get up there by this week. But if I only thought Amazon was going to go to 960 to 970, then I would do an in the money call spread. And that's if I really was bullish on Amazon and thought it was going higher and really wanted to make a trade. But like I said, you want to do spreads when you feel the stock's going to go a certain direction, but you don't think it's going to have a drastic move in that direction. For example, Amazon. You think it might only, it's definitely, you don't think it's going to go lower this week. You think it's going to ride higher, but you don't think it's going to have that big 3 to 5% move higher this week. So in that case, I would do an in the money or at the money call spread. If I thought it was going lower, I'd do the opposite. I would do the put spread. But right now, like I said, the stocks are at some major support levels, so we need to see on Monday and Tuesday what's going to happen. If it breaks below that support level, TSE members are going to have another month like July. We're going to have 100 to 500% returns on trades as the market continues to decline, because puts make money as stocks go lower. And, it's pretty simple explanation here. A feather... how does that saying go? I forget how that saying goes. I can't think straight now. But it's harder for markets to climb than drop. Drop like a rock and up like a feather, I think they say. That's what I was trying to get at. All right, let me see what other questions here. I still have some more things I'm going over with you guys. I'm just answering some questions before I go on to the next topic. Mike, it all depends on the time frame that I'm looking at. I don't use a yearly chart unless I'm going way out, like 6 months until expiration. I honestly keep mine at 6 months or less. I usually look at the 3-month chart. I like to see what it did here. Like I said here, we're just basically where we are 3 months ago. And yeah, if I'm doing like a weekly trade, I like to look at the 7-day to 1 month chart, and I'll change this from daily. If I'm looking at anything less than a month chart, I'll change this from daily to 4 or 5 minutes. So if I change that to 4 minutes, and that's a little much there for 7 days, I might change it to 15 minutes, and then I'll check things out there. But if it's a weekly trade, I won't look more than a month out. If it's a monthly trade, I'll do 3-month chart. I usually don't do anything further than a month or month and a half out, unless I really feel a stock's going to move a certain direction based on some type of news event that's going to come out. Then I might do a little bit further out. But I usually won't hold it till that expiration. I'll still sell it once it makes the move I think it's going to make. What other questions? How do you set up the moving averages on your chart? Okay, Jay, very simple here. Let's get rid of this now and I'll show you. So what we want to do to set up the simple moving averages, if you have E-Trade Pro, you go to moving average. Your period here, like I said, we do the 10-day, 20-day, and 50-day. So the 10-day I like to make yellow. There's that one. We click it again, moving average. The next one's the 20-day. That one, I forget what color I had it before. We'll make that one pink. Oh. And then the 50-day we'll make red. And there you go. There's your moving averages. You're welcome. Any other questions before I go on here? Let me scroll up a little bit, see if there was anything else. Brian, you asked, quick question, is the $1.20 for the whole 100 shares or per contract? The $1.20, like I said, 1.20, that's for control over 100 shares. So you have to multiply that by 100. So it's going to cost $120. Like I think you were asking that on this chart down here for the 990, which was $1.20. This you still have to multiply by 100. So instead of $1, it's going to be $128 it last traded at. Theoretically, it's saying you get it at $1.18. So to control 100 shares of Amazon at $9.90 is going to cost $118. Now there are instances where it's good to go out of the money. Like for example, we did a piggyback trade on Baba when Baidu had earnings. Right here, you see this 775% gain. We actually had a 1,200% return on this trade. And this was the actual alert that went out. I said it's a piggyback trade off of Baidu earnings. I told members this option had a chance to make 1,000% gain. And I told them if Baidu did well, that Baba would go higher. And Baidu did extremely well. Baba surged the next day, and we had 1,200% return. It was incredible. The way we did it, we closed out the short trade, the short option. We took money on that because this was a spread. We took money on that, and then we let the long call go, and we closed that for 775%. So it's only showing 775% here because it's only showing the long call. It's not showing the profit on the short call. But we had a 1,200% gain here. And if you see here, you'll notice that, like I said, we don't let our trades lose more than 50%. I mean, there are a few times where you are going to take a, larger than a 50% loss, especially if, like, for example, let's say you hold the stock overnight, and overnight there's a big event that happens, and the stock really drops the next day, and you have the calls. It's not going to hit your stop because it's well below it. But as you see here we have on our performance page, which anyone can see whether you're a member or not, it tells you the length that we were in the trade for. All of our trades here, they're on for at least 1 day. So when you see a day, that means it's an overnight trade. It's not a day trade. Okay, so it's overnight trade for at least 1 day. You see here, anyone could see our performance. It's not just for members. There's another nice trade, 509% return. So you could see, you could go all the way back, look at our gains, see how we did. Some months we only have a few trades because I don't see much going on. And then months like July here's May. We had a ton of trades in May. June we had a pretty good month, and July was a great month. We had a lot of trades in July. And right now for August, we're at about a 9% overall gain. As you see here, for about a year and 1 month, we had 206 trades. The average trade making around 74.71% return. And how you calculate that, you add the gain minus the losses, divide it by how many trades there are. 1, 2, 3, 4, 5, 6, 7, 8, 9. So you add the gains all together and then subtract the losses, divide by 9, and that'll give you our average return for the month. Now let me go over something else. Like I said, the CEO of Benzinga came along. He sent me an email. They're a member of my service, and he wanted me to try this out. If any of you heard of Bloomberg, the Bloomberg terminals cost about $30,000 to purchase. I think it's per year. It might not be. It might be one time. But this Benzinga, I've never heard of it before the CEO. I guess TD Ameritrade, like I said, you've seen I have E-Trade. TD Ameritrade has a deal with them where you'll only get access to the chat room and the guy talking. But the CEO came to me and he wanted to do a deal with me. And if TSE members, those of you who were in the chat room on Thursday, that's how we got the NVO trade. We made a day trade in TSE. Let me show you this quick. So here's our site. For those of you who aren't members, I'll give you a brief tutorial here. Here's our chat room. Usually there's about 80 to 100 members in here throughout the trading day, and you could see whatever's going on here. Members could chat with each other. So this is the live trading room. Here's the trade feed. this shows you all the trades we made. Like on Thursday, we made a trade. We bought the DIA 220 strike puts for this week's expo. We paid an entry price of 225. Al put this here. He shouldn't have put that there. But we bought to open the puts 220 strike for August 25th expiration. The stock when we purchased this was at 218.66. Its current price is 216. And since it's a put, we make money when the stock drops. So right now we have about a 50% return on this trade. These trades, once I make the trade, you'll get an email alert saying new trade. It'll say DIA 220 strike puts, buy to open, put 220 strike for August 25th expo. You also get a text alert. That'll tell you the trade. And then, like I said, it's here on the website. Videos, you have access to all of our videos on here. And it just goes down, and it has enough videos for any type of trader. And that's about it. Our performance, our live trading room, I mean, that's huge. There's other sites out there that charge $5,000 a month for a live trading room like we have. And like I said, now with Benzinga Pro, I wanted to get back to this. The CEO made a deal with me for TSE members. If you go to, let's see here, benzinga.com. Let me log out here. If you go to their pricing, you'll see that it cost, let me see where it is here. I don't know where the hell the pricing was. The guy showed me. It's like, here it is here. So the premium is $300 a month. The guy made a deal with me for TSE members that they'll give you 50% off. So it'll be $150 a month, and he'll give you 3 months free. So if you want to use that, all you have to do is use promo code. I'll write this down if you guys want to check it out. It's Team TSE. Like I said, you get half off, and you'll get 3 months free if you sign up for the year membership. So like I said, I never heard of Benzinga before. The guy emailed me. Al and a few members said they've heard of it. I tried it out. The guy asked me to try it out. I logged in, and this guy, if you click on Squawk, you'll hear him talk. And you know, like if you have your E-Trade Pro platform up and you only have one screen, for example, or you have other stuff on your other screen, you'll hear the guy actually announcing. You'll hear the guy announcing the breaking news in here. Like the red, I think that's a more important news article than others. And then there's all different colors too that happen. But anyway, NVO came up, and I heard the guy Squawk say it was breaking news that a diabetes drug just got approval. And I typed in NVO quick, and I seen it starting to search. I told members inside the chat room quick. I said, guys, we need to jump in NVO immediately. It just got a drug approval. The stock's going to head higher. And that was at like $46 or $45 a share, and it ended up going to like 47 or 48. And I just bought shares. I bought 21 or 2,200 shares of NVO, and a lot of the members ended up buying calls, and they made over a 300% return on. So that's a great feature here. I love it. I'm definitely going to be continuing to use this. Actually, I told members on Thursday and Friday what I'm going to do. I'm going to make like one day of the week a day trading day. It's probably going to be on Friday. Not sure when, but I'm going to do the join me so they see my live screen, and they're going to see us day trading, and we're going to do day trades together. This join me I really like. Like I said, I usually used YouTube, and it was a little complicated to make videos with the Screencast-O-Matic and then upload them, download them, and edit them. So this join me, like I said, it's a simple It's a simple program. I forgot to go over the PowerPoint presentation, so now let's take the time and go over this PowerPoint. Let me start this from the beginning. I don't think you could hear. I hired someone to do voiceover on this, but I don't think you could hear them, so I'm just going to block her out and I'm going to go over this slideshow with you. And this is just how to take full advantage of the Santarelli Exchange membership. And like I said, also, I want to go over a trading plan, risk, money, and trade management with you. I'm going to do that later in this week. Or if you guys are really interested and still up, possibly we could go over tonight if I get my stuff together here. So let's go over this.
The following video will show
The following video will tell you how to take full advantage of the SantarelliExchange.com membership. This is for educational purposes only. We are not licensed broker or financial advisor. Check with your broker before placing trades.
if you go to the Santa
Sorry guys, I had someone add to the group here.
website,
After logging into the SantarelliExchange.com website, you'll see the home page.
there'll be a section with
The top of the home page, you'll see these tabs.
and each of these tabs contains important information that I'm gonna.
Each of these tabs contain important information.
The first tab you
The
see
first tab you see is education. This section is still being built out, but includes these topics that are most important to a trader's success. Here's some of the topics that are included: advanced option selling, charting basics, and so on.
the
Trade feed. This is one of the most important sections for members. This is the section that has a list of current open trades and closed trades. This will tell you the type of trade, the entry price, the stock price at purchase, the order, and a brief description of the trade. So when I send out an email and text alert, you're going to get this information: the current stock price, the order, and all that. She's talking a little faster than I was there. The portfolio tab, that shows you every trade that we've ever made. It tells you the open date, the close date, strike, expiration, and the percent gain or loss. The videos on the Santarelli Exchange. This video contains a large library of videos on all different topics related to trading options. These videos are for all levels of traders.
And if there is something that you want to see that isn't there,
And like I said, if there's something you want me to make a video on, I'd be glad to make it. Like I said, we had 100 new members join in the last month. They needed some basic knowledge on calls and puts, so I did that. The live chat tab. This is where all the full-time traders go during. This is where all the full-time traders go during the day. We usually have between 70 to 100 people in there throughout the day. Usually Mondays are a little slow. We might only have like 60 or 70 in there. But this is great. Members discuss events, trade setups, trade ideas. They post charts. I have Big Al in there as an employee of TSC. He shares charts, answers any questions you guys have. I'm in there from time to time. I pop in. Usually I'm on my trading platform though and doing stuff in there. But if you have questions, you could ask Big Al or myself. And like I said, it's a great community of traders. We really are a family. It's a great family we have in there. We're near 400 members on the Santarelli Exchange right now. Performance tabs. This tells you the result of all our closed trades. Includes individual trades.
there are two ways that trade alerts will come.
Trade alerts via email. This is the actual email that you get from the Santarelli Exchange. This is the actual email.
When a trade alert comes,
Here's the symbol.
it will
It tells you the open date, the stock at purchase, the entry price, that's a price that we're going to pay for it, and it tells you the risk level. Over here, if it's only order 1 filled out, that means it's just a regular call. If order 2 is filled in, that means it's a spread. So if it's just this filled in, order 1, it's a call or put. If 2 orders are filled in, it's a spread. Risk level 1 to 15, that means it's the lowest level of risk I feel possible. 16 to 30 is low to medium risk value. 31 to 50 is a higher risk, and the 50 to 100, these are much higher risk, higher reward potentials. Those ones are pure spec trades, like earnings trades or whatever. And then down here in the email, you will get a description on the trade itself. And then she's going to go over here. I'm not sure if you guys could hear her. Before, when we were going over it, you couldn't, so I'm just doing it as well.
Trade, if it's a spread, the order 1 and order 2 will be filled out. If it's a call or put, it'll just be...
Any questions, guys, please ask in the chat room. So here's how the text alerts look.
Like this when they come out, and they all
You'll get a text message from the Santarelli Exchange, and it'll tell you new posted trade.
condensed.
It tells you the symbol, open price, stock price.
Weekly trades are trades that expire that week. They have a much
Weekly trades are trades that expire that week.
trades.
Have a much higher risk than typical monthly expiration trades, or trades that have longer than a month until expiration. If it doesn't expire on the third Friday of the month, then it's a weekly trade. It's important to realize that weekly expirations carry much higher risk, but have the potential for much larger returns. I typically use these strategies on stocks I feel have a lot of momentum. Monthly trades. These are the trades that expire on the third Friday of every month. These are trades I place when I feel stock may move in a certain direction, but may need more time to get to my price target.
Stock to move in our favor and make us profits.
These trades give us more time for the stock to move in our favor and make us profits. It takes extreme discipline to know if you should be trading the weekly or monthly expirations and the type of strategy that you should use. Calls and puts. These are the types of strategies that I most commonly use when we have volatility in the market and stocks are actively moving. This is a simple strategy that makes large returns when the underlying stock has a decent move in either direction.
If a weekly call moves 1% higher,
If a weekly call moves 1% higher, the option could increase 25 to 100% on a weekly option.
spreads. This is the type of strategy I use frequently when markets are relatively flat. They have a limit on your maximum potential gain, but only need a small move in the
Okay, guys, I don't want to go any further there because that's getting into further topics. I have money risk trade management there. I have a bunch of different things here that we don't want to go into right now because I need to give you a basic explanation first before we hop into that. So if there's any other questions, I'm going to open this up actually. Hold on, let me make everyone live and we can chat and communicate.
Everyone else is now unmuted.
All right, guys, you're all unmuted. I could hear you all. If you have questions, feel free to ask them.
Dave, on that example earlier when you were doing the debt spread,
What's that?
when you did that debit spread earlier with the Amazon,
The debit spread with Amazon, yes?
do you let that expire too if it's in the money, or do you have to
Okay.
sell it to get the profit?
Great question. Okay, so again here, if we did, let me put this on mute while I'm going over this.
Everyone else is now muted.
All right, so he asked a great question. If we have the 950, 750, 955 put spread, if Amazon's below 955, do we need to sell it to lock in that gain or get a profit? Answer to that is no. As long as Amazon's below 955, this trade is going to expire and exercise itself automatically. So Saturday comes along, as long as the stock's below 955, if it's a put spread, then you don't have to do anything. And on Saturday or maybe even Friday night, you'll see in your account that everything was sold and all you're left with is the pure profit and obviously the initial investment. So if, for example, if you had 5 contracts that you paid $550 for and the stock is below 955, Friday night or Saturday morning, you should see $1,250 in your account. And same thing with calls. If you do call, let's do an example here quick. If we did the 955, 957.50, again, we just need the stock to go up $1 to have max gains. This one's a little bit more. Why? Maybe they're thinking that the stock's going to go higher, or maybe it's just the difference between the bid and the ask of these two. But this one's $1.45. So 5 contracts of this is going to cost you $725. Again, your max it'll be worth is $1,250. So this, your max gain, 250 divided by 1.45. Your max gain on this is 72.41% return if you paid $1.45 for it. So here again, as long as Amazon's above 957.50, you don't have to sell it, and you could let it expire, do nothing. But the only time you have to sell an option, or a spread I should say, is if it's between these two strikes on expiration day. If August 25th comes along and Amazon's at 955.01, you have to sell this. Otherwise, you're going to be long 100 shares of Amazon at 955 on Monday. If it's below these two strikes, then the option's worthless. You lost your max investment of whatever it was you paid, $700, $725 for the 5 contracts. Any other questions there? Let me unmute you.
Everyone else is now unmuted.
All right, any other questions?
Is there any chance that the contracts don't automatically close out?
No, they're gonna. If, for example, on this here, the calls 955 you bought, you sold to 957.50. As long as Amazon's above 957.50, this is gonna exercise and expire for full value. So you don't have to worry about selling it as long as the stock's above. Now, if it's at 957.49, if it's just 1 penny weight, you have to sell it, or you're going to be long 100 shares in your account on Monday for Amazon at 955. So it's best to sell if you're new to options. It's best to sell. You can still sell it. Instead of being worth $2.50, you could type in a limit order and sell it like this for $2.45. And when you sell a spread, you do it net credit. When you buy a spread, it's net debit. When you sell a spread, it's net credit. Any other questions? Okay. Also, what
Everyone else is now muted.
Also, what I wanted to go over with you guys, especially those of you that are new to the Santarelli Exchange, we have an August promotion going on, TSC. Use promo code back to school, capital letters, and you'll receive $600 off a yearly subscription. If you're interested, just go to the website, thesantarelliexchange.com, and fill out and use this promo code for $600. Or you could be a monthly member. Monthly membership is $200 per month, and you could go on like that, or you could sign up for the year. And Benzinga, like I said, if you want to give it a try, you could try it out for Team TSC. That's the CEO that gave me that code to use. And like I said, it really is great. I'm honest. I wouldn't tell you if it was a shitty program. I would tell you it's a shitty program. But I actually took a trade on this on NVO, Norvo Disc, or whatever the heck it's called, and we had a nice return on that. And like I said, members will tell you, we did it live as it was happening, and stock just kept climbing. I took only about a $4,000 gain on it, and other members took about a 300% gain on it because they got the calls and I bought the shares. So any other questions, please type them in the chat. Yes, you use this promo code for TSC. That's good for a year membership. That'll save you $600. Or if you want to sign up for monthly membership, it's $200 a month. Any other questions? All right, guys, if you don't have any other questions, I'm going to get going here. If you do have questions and I didn't answer them, post them. And this is my main Facebook group. Hold on here and let me get here. The Day Trading Stock and Options Room. This is my room. We have, how many members do we have in here? We have around 8,700 members in here. I haven't been that active in here. I have to admit I have not been that active. Yeah, guys, I'm sorry if the room was full. I'm gonna upgrade to the next level. We had 60 members in the chat room tonight, and I guess that's the most they allow. But I don't post that much in here. I post a lot on my site for my members. During the trading day, like I said, there's about 100 members in the trade room, 80 to 100 members. I'm going to start posting a little bit more in here, but I'm obviously not going to post my trades in here. That's for my members. But if you have any questions, feel free to post them in here and tag me, and I'd be happy to ask any questions. If you need help, I'd be glad to help you. And have a great night. All right, guys. Take care.